Hey friends, it's Steve with Hudson Advantage Realty, where we guarantee to sell your home or we'll buy it. If you've joined us previously, we've been discussing trends in the real estate market and what we can expect going into 2022. The big story for us right now, interest rates. No doubt you're starting to see some movement in interest rates for a lot of different reasons. I want to talk about that for just a minute. Let's start by saying we're certainly not here today to say the sky is falling and interest rates are about to shoot up. But we do want to give you a look at what interest rates are doing so that you can be educated on this topic. The biggest frenzy in the housing market could be rising interest rates. It's going to become more expensive for people to borrow. Right now, the 30-year fixed rate is just above 3%. That's amazing. It's sort of crazy we're talking about rising interest rates when we've still got an average 30-year fixed interest rate of just over 3%. You can see here right now Freddie Mac is recording 3.01% on their weekly survey. But that has jumped up slightly as they're starting to see some indications from the Fed saying we're going to taper soon. Taper soon? What does that mean? Sam Cotter is Vice President and Chief Economist at Freddie Mac. Sam says this: many factors led to this increase, including the Federal Reserve communicating that it will taper. There's that word taper, its support to the capital market. Then there's the broadening of inflation, emerging energy supply shortages, compounded by material and other shortages. Time out here. According to Sam, there are three big things impacting mortgage rates. The Fed tapering back, 1, 2, inflation, and 3, supply and labor shortages. So let's look at that. What are they saying? We've been buying mortgage-backed securities, and now we're going to start to taper that. We're going to start to pull back on that. As that happens, the market will adjust to price that in. The issue is the economy is recovering, and they're trying to speed up that recovery, and therefore the Fed is saying we're going to start to taper on what we're buying in the mortgage market. That's causing interest rates to rise. Nevertheless, I think it's important we realize we're still in a great environment right now. Yes, it will cost more to buy a home as the homes appreciate next year and as interest rates rise. What should that indicate to you? That you shouldn't wait. However, nobody's calling for a sharp spike in rates. That's important to note. So join us next week. We'll continue to dive into this matter about interest rates as we approach 2022. Be sure to subscribe so you can stay up to date. And thanks for tuning into this market update. We'll see you around the neighborhood.